TGIF Eagles. The dollar is not an eagle. The dollar is down. So we're about to challenge new lows for the move. Shouldn't be a surprise to anyone in here listening to my voice. Just a quick recap after this false breakout here. We talked about it here. We talked about it this week. Talked about new lows. Looks like they're going to manifest probably next week. Could have picked your poison. EG not doing as well today because Steve was right. The pound rallied as well. I've seen some Ellioticians saying that this could be a 5 in cable. Haven't quite made a new high here. So maybe 37, 38 could be getting closer to some type of high there. We've been talking 21.5, 22 in euro. Diverging a little bit, but you're going to have to let it do some work. I would not fade dollar weakness quite yet. Give me a Y if you're with me. Hello, Forex Gal. It's not a surprise to any of us here in Face. We've been dollar bears for quite some time. So, Grega included. Grega showed that it wasn't done. It was a 4. Now we're in 5. Now we have to wait for 5 to complete to the downside in the dollar. Ballpark numbers are anywhere from 90 to 88.5. Thank you, Luca. Looking forward to your interview next month. Are you getting prepared? Getting prepared for your, you have enough time? Okay. So, you know, I don't want to be a broken record. Promo ends Monday. And we're not going to be open Monday. It's MLK Day here in the U.S., despite what President Trump said. Martin Luther King's ancestors did not immigrate of their free will here. It was forcible. Doing the makeup? Okay. So at the minimum, you should at least try one and get one free. That's like half off here. And you'll have 3 days to get used to navigating, so you could have an excellent finish to January and get ready for February. And so you're ready for the turn in the dollar. I guarantee you that the team will give you plenty of notice. You know, Blake will. Blake's probably going to be the first one to smell the turn. You know, Nick's going to have some harmonic levels to pay attention to. You know, Greg has already kind of given us a little bit of a breakdown as far as where he thinks a low dollar will come. And from what I recall when he was here, even if it's only a bear market rally, there's going to be a buy where he thinks the Dixie could recover to 97. So there's going to be a big play in the dollar coming up after the low comes in. We're also heading towards Stelios's target and on the downside of the dollar, and Steve's as well. So get prepared. I'd say 80%, 85% of this leg of dollar weakness is completed. But, you know, don't be early. And if you are early, find the strongest currency to buy. It'll be more forgiving. I'm sure Amanda in the chat room, who trades a lot of cable, is going to be alert to some type of top coming in there as well. So between the whole team, you're going to know when to buy the dollar. But I can tell you right now, I don't think it's today. Everyone with me? Something I talked about also in gold. I had talked about I have a hard time being bearish gold when I'm bearish the dollar. But now we are starting to diverge a little bit. There is a lot of resistance up here at the 1333 level. I wouldn't be surprised if we're looking at something 78.6 back here. This is a daily. Let's look at some shorter term stuff, see if it's confirming. Yeah, it's really not confirming up here. So there could be some type of short scalp setting up in gold as well, probably around the dollar turn. I wouldn't be chasing gold to the upside up here as well. And with all this going on and the bonds getting killed because China, our banker, doesn't want our paper anymore, I want to see what Greg thinks of the bonds. I mean, since I joined in April, he was looking for this one more wave. Let me look at the weekly. That was going to be a 5. Well, we haven't made new lows in the 30. We have in the 10-year. So that's the yield curve flattening. So I wouldn't be surprised when we talk to Greg next week that there's some type of low coming in the bond market here. It sure has taken a long time for it to finally clear out these lows. But again, I think it's premature. I'm going to wait for the Wizard of Waves next week to see what his count looks like for possible contrarian positions on the bonds. Aussie Kiwi. Let me take a look. What time frame? Okay. 1 hour. Definitely diverging down here. Let's see what the 4 looks like. Plus, I got rid of all these longs. Yeah, I'd be alert for something there. You know, I don't like to put a lot of positions on or even really trade on a Friday. I'd say your first clue is back over 880, okay? But good eye on that, Joe. I don't see the form that well for a 3 drive, but I definitely see the glaring divergence on multiple time frames, okay? And the RSI reading is over 30, making new lows. You're probably onto something here. So glad that you're starting to pay attention to one of the tools. Remember, RSI is just one tool, 3 drives. Don't be a one-trick pony like me. You can learn all different types of methodology. It's a great tool, but it's not the only tool. Take advantage of the breadth of knowledge of the ForexAnalytix team. That's what I say. I know I do it. And with that being said, also, yeah, I already told you guys we're not going to be here Monday, but if there's, you know, something dramatic happening in the market, you know that Blake never sleeps, always has an eye on his phone. So even on holidays, if something's going on, he'll open the room and the chat room will be open. So we'll see what happens on Monday. And I want to thank everybody for their support of our work here at ForexAnalytix by becoming subscribers. We've had a very good year of growth. And now we're in the new year and we're looking to mushroom. Spread the word to your friends that at least they could come to face, and you know there's no commitment in face for them to get a feel for what we have to offer, at least for an hour a day, plus all the great interviews. I know I get great ideas in the interviews. Kirk Spano was bullish crude, one of the reasons why I was constructive crude, looking for 62. You know, about 5 months ago when I first brought him on. You know, he's looking for 80. So a lot of great guests also give you ideas here in face. And really, if you have time on the weekends to go to our YouTube channel and you just replay a few sessions, every session has teachable moments in it. I've seen some great mentoring by Blake and by Steve and by Grega and by Nick. So they're not only ideas, they also give you an insight on the whys. And the whys are very important because, like Blake says, he comes in here with a pop quiz every once in a while, wants to make sure that you have your thinking caps on. The whys will give you the ability to repeat it on your own. Just knowing, calling out a trade and a price and a target and a stop, there's no growth for you. But understanding the whys, when we're all retired in the Caribbean somewhere and we're not interacting with retail traders, you guys will be able to say, hey, I remember when Blake was talking about, you know, how to control risk, and how Dale pointed out a 3-drive formation, and how Greg talked about running corrections and blowing through trend lines. And, you know, you're going to have a base of knowledge for the rest of your trading life by hanging out with us here, not only in face, but as a subscriber. Plus a big benefit that the markets don't stop when face ends. And the private chat's a great place for you to spend as many hours a day as you want to. And remember, we also have the mobile app so that you don't have to be a slave to your workstation. And if you have to go and do something, or you just want to enjoy and live your life, if something important like support or resistance levels are breached, your phone's going to let you know, because we're always watching and we're going to let you know. So I hope everyone had a good week. My best call of the week was the long side of Euro Pound and the short side of the dollar from Turnaround Tuesday. I hope it was helpful to you guys. The room cleaned up on yen crosses to the downside. Steve had some excellent calls, and Nick had some real good insights on crypto when she was here yesterday. So I learn every week in here. So I'm assuming that happens to everyone here. Give me a Y if you learn something new every week. Hanging out together. That's what a community does. Community supports each other. You know, we have a great community. I never sent anyone in here rooting for anyone to fail. So, you know, we have each other's backs, and we're rooting for success for everyone. And I know as a coach that even if I'm not on the floor making a 3-point shot, and someone that I've taught a few things to is on the floor and they score the goal or they crack a home run, I feel just as good about it as if it was my own account. So glad to be working with everyone. I'm going to pass it over to either Blake or Steve now and see how they see the markets wrapping up. No way to say that the dollar is anything but weak right now, but now we're getting closer. But don't jump the gun. You know, better to, what I've learned from Steve, better to be a little bit late and have confirmation and a higher probability of the outcome you're looking for than trying to get the edge and, you know, be long from the bottom, short from the top, not knowing whether or not it is a or the top or bottom.
Hey, Dale.
Yeah, hey, Blake, how are you, buddy?
Good morning. Hey, we have in about 17 minutes. We have the key data coming in for the week, and which is consumer prices and retail sales. And I wanted to cover a couple of things before the data is released, because I'm going to pass it over to Steve so I can trade the data.
Okay, buddy.
But hey, just to reiterate a couple of things really fast. In the event we get up on Monday, well, I get up pretty early, and despite the
yeah, it's your biorhythm. Yeah.
Yeah, it is. I'll be awake. In the event that something crazy has happened, meaning, you know, futures are down dramatically, futures are up dramatically, we have 100+ pips moves in currency markets all over the place, I will impromptu start a webinar, and I'll most of you guys follow me via Twitter, so I'll initiate a webinar and get started and kind of get you guys up to speed. So just so you guys all know that, even though it is a holiday here in the U.S. Second thing is, yes, correct. This is the last day of our, or not the last day, the last weekend of our holiday offer, our New Year's offer. So make sure you take advantage. It's a great offer that won't be repeated anytime in the near future. So take advantage of it for those of you guys that are not, you know, ForexAnalytix subscribers. Now, and I appreciate all the kind words, Dale. Always nice. And like I said, I do appreciate it. Now,
it's not bullshit.
Well, thank you. I appreciate that.
I don't need to patronize anyone here because
Right.
you know what? I interviewed almost everyone here before I joined the team, so I knew what I was getting into.
And thank you for that. But I am going to cut you short just because there's some key stuff that's developing right now. So the euro dollar is at new trend highs, and you said, well, I'm not sure Blake would tell you to start buying the dollar yet. Look, I'm only going to tell you guys what I've been planning to do. And I had an order out, and I still have an order out to sell the euro dollar at 121.61. I've had it. You can see it right here. It's right there. It's right there. I had an order out to take profit, which is actually initiate a short trade overnight at 121.61. I've had it out there all night because I'm thinking, the euro dollar is going to rally and we're going to push right into new highs. And I was put it out there. Now, the problem is it hasn't been triggered ahead of this really key data. So what I'm probably going to do is I'm going to pause the order here and see what the data brings. But when I called some of the guys that I know that are really, really aggressive equity market traders, first thing he said to me, he goes, because he sees me calling into his office, he's like, dude, your euro is almost at your 121.50, because I've been telling him for the last week and a half, like, hey, the euro is going to 121.50. I'm going to probably be shorting there. But now that we're here, it's a little tricky because you have this data coming up. If we were already past data and it's already come out and now we're trading here, I'd be like, yeah, I'm about ready to short it. But right now, I've got to wait for the inflation data. And so now the reason why I've been wanting to sell here is because, and I'm going to just illustrate this to you guys. As I have said, I don't think that the dollar weakness, even though it's going to be the theme of 2018, it's not going to be a straight shot. And I even explained it on the week ahead video. Go watch last Sunday's video. I think we're going to 121.50, 121.60, which is the 50% retracement, and then we're probably going to pull back. No, can we go a little higher? Sure. I mean, you look at like the 161% extension of just the last 48 hours. That'll take us to 122. We get a weak CPI print. We could be trading up at 122 today, or a weak retail sales. But I think really what you should be looking at is wages, and or wage inflation rather. So if CPI in the core, not the headline number, if core inflation is starting to rise, that's excluding food and energy costs, then or food and energy prices, that's where you have to start thinking, okay, wages might start to and wages are increasing. Just if you look at a lot of just companies that are increasing prices, you got wage inflation probably going to start increasing over the next couple months. Is it going to leak over to the consumer? And that's what if we start to see high inflation or inflation start to creep up, that might put a stop to this dollar weakness that we've been seeing, and it's been very persistent. The flip side is, the flip side is if the CPI number continues to disappoint, then the euro dollar could rally further. Also to note, and this comes from the office that I trade at, they're like, the last 11 CPI prints, the dollar yen has traded lower. That's because CPI continues to miss to the downside. So, and if you're long dollar yen, you got to be thinking about that. You got to be thinking, oh well, what happens on a weak print? Do we break through the support here at 111 or 110, 85? And so the market is the dollar's at risk of a continuation. If the data, and by the way, CPI, like the headline number, is expected to come in actually a little hotter than last print. We're expected to come in at 0.2%. If we come in line, we could actually see a little bit of dollar weakness, but then I would expect that we might get a bounce right after that. That's why an inline print for me would mean, the euro dollar might, hit this 121.67, which is the 50% retracement right up here, and then I might look for a reversal. So this is everything that I'm going to do today is data dependent. I have started buying some dollars, but again, it's against the Kiwi. So, and here's something, just a quick piece of information. Everything that's moving right now is the euro and the pound. Okay, so the euro continues to extend its gains. If the euro stops and reverses and the dollar starts to pick up some strength, the Kiwi's probably going to get hit because the Kiwi didn't follow overnight. Either did the Aussie, and they're both very extended. We've been looking for the, I mean, they just, the Aussie extended to the 261% extension. We had that written down here. The Aussie, blah, 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 blah. Despite the divergent overbought RSIs, the Aussie continues to push higher into the 161% extension. At the 79.06 level, which may be tested this evening at these extremes, a pullback is becoming increasingly likely. That was last night's analysis. And, we had this, drawn out, that would push up here above 79 and reverse. And the point I'm trying to make here is we're stalling with all this dollar weakness. The commodity currencies are stalling. So if the dollar does bounce, these commodity currencies, including the dollar Canadian, remember, positioning is pretty skewed here. The dollar Canadian can bounce back to 126.25 in a heartbeat. So am I buying dollars? I've already started buying some, and that's yesterday. And
I know, Blake, I'm sorry to interrupt. I know you came out of Euro Yen, did very well, and we're looking for a rally. Does this action give you pause on recommits?
Well, actually, you know what? It's interesting you ask. I sold a little bit this morning. Okay. I sold a little bit here because I think the euro yen's not going to be grossly affected by this CPI print. I don't, so for me, I started nibbling on it on the short side just about 7 pips ago. So
nice cover.
Thanks. I actually played it yesterday short. If you guys were in the chat room, I played this move. I sold it at 134 average, and then I covered it 136.75. It was a very tough trade. I was out of the money for a lot of the time, and I covered it yesterday. Thank God, because and I told the guys when I covered it at 134.70, I'm like, with the risk appetite so strong, I think the euro yen's probably going to continue higher in Asia, and obviously we not only continued in Asia, we continued a lot higher throughout Europe. So, and it actually went further than I thought. We're past the 50% retracement already. But the thing about the euro yen is I don't mind selling it up here. I don't. It's not. I'm not opposed to it because, again, I've been expecting the euro dollar to reach these levels. Now that we're at these levels, I expect it to be very tough. I don't expect now the euro could go to 122, obviously, as I pointed out this morning. But I'm not in the camp that thinks the euro dollar is going to 124 this week or this next week or 2 weeks from now. I think we're going to come right back down again. Now, I could be wrong, of course, but I also believe that the dollar yen is going to 110. So if the euro dollar goes to 122 and the US dollar yen goes down to 110, the euro yen is probably going to be trading back at 134, maybe even a little bit lower. So I'm trading the euro yen more as a yen trade, not so much a euro trade, even though it's been dragged up overnight by the euro. So those are my opinions about like the yen at this point. And one of the other things that that I should point out too, just before I turn it over to Steve, crude oil. Keep an eye on crude. Crude put in a gravestone doji yesterday. It was a 261% extension of the triangle, which, by the way, this triangle surpassed what I thought it was going to do. I thought it was going to stop here at $61. It continued higher. This is one of the things that's going to eventually factor into consumer prices, is the strong prices in crude, whether you're talking Brent or West Texas. But we also hit 161% extension, or just surpassed it, of the last consolidation that we saw, in 2017 for the most part of 2017, and we're at 161% extension. Obviously, we had a little bit of an overshoot, but if crude oil starts to sell off, that could have an impact on the dollar Canadian, also on the U.S. dollar Norwegian krona, and that I'm paying pretty close attention to, because even though like a raging U.S. dollar Canadian bull, I'm actually not at all. I still know the positioning is really screwed up there, meaning there's so many Canadian longs. So, I could see the dollar Canadian, if the dollar bounces, and I'm just saying if the dollar bounces, let's say the euro dollar comes back down to, I don't know, like 120, 118. Could that put the U.S. dollar Canadian back at like 128 or the 200-day moving average? It could. You couple a dollar bounce with, a couple of dollar bounce with weaker crude over the course of the next week or two. Ooh, there goes the Euro Aussie. Then you have a you get a rally in the U.S. dollar Canadian. Let's take a look at the Euro Aussie. I was looking at this thing, about coming out of its channel overnight, and strong. The euro looks really strong, guys. The euro looks strong against everything. Euro Aussie, Euro New Zealand. I'm not going to take any of this thunder from Steve, but like this is a channel support. I had it drawn incorrectly, and I tried to trade off it 2 days ago. You can see this pip got invalidated, and sometimes I'm not perfect by any stretch of the means, and I have to adjust my technical analysis all the time. And my Euro New Zealand, I tried to play it right off of this support, or I don't know if I put it in as a pip, but I tried to trade it, and I took just a small loss, and I'm like, you know what, maybe I didn't draw that correctly, and I brought that channel down to the spike lows, and lo and behold, that's what the market was looking at. But we've had a pretty aggressive bounce from here. Anyway, guys, be careful. CPI is coming up. Steve, I hope you're here.
Hope that as well, Blake.
Okay.
Good morning.
Good morning. I got to pass it over to you because I got to get ready for this key data.
Absolutely,
just guys, be really, really careful with the euro dollar up at these levels. That's the takeaway from today's.
Absolutely, mate. Thank you very much.
Blake.
Yeah. He said great analysis, Blake.
Oh, thank you. Thanks, Dale, and thanks, Steve, and thanks everybody listening in. Yes, thanks. Have a great one, guys.
Okay, so hey Dale, I'm good, my friend. I'm very good. How have you been? How do you feel? Besides your voice, which sounds
froggy, I'm better now.
Okay. Other than that, are you feeling okay?
I'm finally getting over that thing. So
okay,
I feel
good.
Strong, man, like Rocky Balboa.
Let me first go over. I know they're going to build a statue for you as well, right? Video running up the stairs, while training, etc. So
with
what Blake?
With my cane huffing and puffing, buddy. All right.
So we warned plenty of times. Actually, yesterday I saw another article from a different article than the one I had retweeted some time ago about oil. Very bullish now, like predictions like $70 is coming, etc. Yesterday's candle is extremely bearish. We overshot that ascending channel, but on a daily basis, actually on a daily closing basis, we were just like 30 cents away from the 161.8 target that we had at 63.30. And I warn, this, especially if we see a down day today, this is a very bearish formation, and we might be near seeing a reversal here. I know that CPI is coming. Stelio, just tell me the moment the numbers come.
I'm here. I'll let you know. Don't worry.
Okay. And I want to say before that I just shorted gold while Blake was speaking, 1/3 position. I think that this thrust out of this triangle is terminal in the short term. I'm expecting that we might push a little bit lower. That's why I started nimbling in. I'm looking for prices to come back at 1296, 1300, something like that. If not from here, from just a bit higher. So I've started nimbling in, you know, we see what happens from here. I'm willing to add either higher or lower if we see a reversal from current levels. But you know, I really like this. Let's see.
Numbers are mostly in line. Core CPI is 0.1 higher than expected.
Gold is dumping, by the way. Gold dumping $6, instantly $6 down. USD yen is actually rebounding from the neckline of this head and shoulders. So we're seeing a positive dollar reaction, although CPI came in at 0.1 with expected 0.2. Stelio, did we have something else that was positive?
No, CPI came in 0.1 weaker, but core CPI came in 0.1 stronger. So
okay.
It's all in the details. So I think overall it's a non-event, or should be non-event.
More or less, but we got an immediate move down at gold. I mean, yeah, that was actually lucky because I shorted gold at 1332.5. I wrote it in the webinar, like, what was it, in the chat room, like 10 minutes ago. Something like that.
I don't think anything substantial changes on this. So if you're my opinion, if you're in the money on that, I'd take it. But
no, I'm not going to take it. I'm looking bad actually.
You remind me of Steve's like Gordon Gekko on the beach in the Hamptons, calling Bud Fox, saying, "Made 500 grand in Hong Kong gold, Bud. This is your wake-up call." Remember that scene? Great scene.
Yeah.
By the way, keep in mind, since we're looking at the USD yen, you know, this is a perfect support area from which we're rebounding. It's the 50% fib. It's also, you can see here, a potential neckline of a head and shoulders. So it was also the lows we had in November, at the end of November. So, you know, that was quite a substantial support. You know, as a response of the CPI, which, you know, in essence, as Stelio said, according to the numbers, is more or less a non-event. But regardless, we are seeing USD strengthening here. That still does not show so much of its effect on the euro. I mean, the euro has just barely pulled back. Needless to say, we've said it a lot of times. You know, I stayed away from trying to short the euro, you know, in plenty of occasions. I said that for me it remains bullish. The case is the same. I'm on the same pace with Blake, though, that the market is getting more and more convinced about dollar weakness, and that takes me, you know, every day one step closer to actually wanting to start building long dollar positions. I already have one, which is short Aussie USD, which, by the way, is responding perfectly so far from this resistance zone. Today, earlier, I wrote in the chat room, I took, I think 3.82% of a profit on my last remaining position in the USD NOK. So now I'm completely out of this position as well. That was, you know, a nice ride from 8.29 to a little bit higher than where we're here. And I'm actually looking for some kind of a reaction for the dollar, even if that proves to be in the short term. Okay. Of course, I'm going to be, you know, very careful, because obviously the dollar remains bearish. I'm going to be very careful, and I'm going to selectively start building some dollar long positions, because, you know, timing a turn, you know, it's not an easy thing. Actually, we're seeing again dollar moving lower. The cable is at its highs. By the way, speaking about the cable broke above one more bull flag. And obviously, you know, it's as I was showing yesterday, it has kept posting a series of high lows. It looks extremely likely that today we're going to get a 1.5 year high closing price, at least, because I don't know if we're going to surpass that spike we had back in September. But having to do with closing price, it's very, very likely that we're going to close at the highest we've been in 1.5 years. So, you know, no real indication of a reversal here as well. So with euro and cable doing extremely well, and Aussie and Kiwi seem to be stalling, obviously Blake already stole some of my thunder, as he said, I have to show this. We were looking for a reversal in the Euro Aussie at this ascending trend line, and as a second alternative, we had drawn it back then actually at the 152.20 support resistance area, and that's exactly, we penetrated that area yesterday intraday, but we actually closed above it, and you're seeing the huge reaction we're getting from it today. Now, I see the potential for another move lower from here, and we had a conversation with one of our friends in the chat room for that yesterday. I do see the potential that this might produce one more bearish leg, but for that to be the case, I want to see a rejection from 155, because if the Euro Aussie penetrates 155 to the upside, I think that that was it. I mean, that was the move we had to the downside. Blake also showed, and that's exactly what I had on my on my charts. Actually, I've drawn the channel a little bit differently, but regardless, as you see, we found perfect support at the Euro Kiwi, and they can actually very sloppily see something like a 5-way move down, corrective move, another move down, A, B, C. Very likely we're trying to find the bottom here as well. Actually, from a technical perspective, I like here the Euro Kiwi a little bit more, because it's, a cleaner, I mean, we respected the channel in a perfect manner, but, we always have to take into account that the Aussie Kiwi has broken below this trend line and is currently testing a major horizontal support area. So if I see some strong rebound from this area, then I might even choose to be trying to find a position along the Euro Kiwi in the expectation that perhaps it will be the time of the Kiwi for some days at least to underperform the Aussie, because the opposite has been happening for several days in a row, as you can see here. But as I said, having to do with the Aussie Kiwi, this is a very important support area. It's horizontal support resistance area. It was also the breakout level from this huge trend line. You see how important this trend line has been to the market, right? And the 200 EMA is there as well. So, I'm having, a more comprehensive look of it, because we had a friend asking about it just before, right? Dale, somebody asked you about it. So I think that, if you want to be trading the Aussie Kiwi, you definitely don't want to be short here unless we break this 1082, 1083 level, okay?
Joe Perry.
Steve.
Yes, Elio.
Steve. Hi, just one thing to add, because you're talking about Aussie Kiwi, and we have our friend Bill asking a question, where saying, where fundamentally is the Kiwi getting all its strength since the elections? And this is actually something quite strange looking at it, because nothing has changed fundamentally. The only two reasons I can think of is, one, commodities are getting a lift, and New Zealand obviously has a dependency on them. But more importantly, positioning and sentiment, and
that's what
RSI,
I want to say. Most importantly, Stelio, squeezing people out as usual. Exactly. I mean, it was so consensus that after the elections, the Kiwi would suffer. So consensus opinion,
which it did for a while. Yeah.
Yes, it did for a while, indeed. Yeah. But we've seen this work the opposite way, honestly, thousands of times, right?
Yeah. I mean, the RSI against the dollar, against anything, is above 80, or was at least until a couple of days ago. So
regardless, the Kiwi closed yesterday exactly on the 61.8, and today it's getting rejected. So obviously we warned several days ago when we were here, the 50% fib, we warned that this is not the place to be long anymore, but rather we're getting closer to a point that we're going to see a pullback. And I think that's the case. At the very, very minimum, I would expect a retest of the 7170 area. So, there's still some distance to that, another 70 pips at least. and we see what happens from there. Especially in the Aussie, I'm already committed. I have half a position already. I like the place we're getting rejected. I like the fact that I said several days ago when I was actually in the money that I do see a very high potential that we're going to get one more high, but that's not going to push me away from keeping my short because I'm looking for a bigger move. That was my initial plan, and if every time you're a little bit in the money and you just take some profits there and you don't follow your initial plan, at the end you're going to end up having an effective reward to risk ratio much worse than you initially thought you did. So I have to say that I'm following my plan. If it doesn't work, it doesn't work. But I know that when I follow my plan, it works more often than not, and that's enough for me. So I'm back at the money actually, exactly this area. So if I actually see a breakdown from this, I'm going to be adding, because sometimes I'm looking to add either we move higher or lower, because if we move in a persuasive way lower, I get confirmation, then I can add back. If we move higher, I'm even more confident that it's time for it to snap back. So for example, gold, I wrote in the chat room as well that I had a position to add another third at 1338, but I said that if we see a big reversal candle, I'm going to be adding to the downside, moving to the downside and not waiting to move to the upside. And that's my plan. Already this position is $6 in the money, and I'm really not going to take profits. I'm looking to gain more exposure here, because I honestly believe that there is a good chance that we're going to retest at least the 1296 to 1300 area, which is like quite a nice distance from here. Same with crude. I just don't want to have too many reversal trades, because always catching reversals is a lower probability kind of trading. Otherwise, I would have already put a position in crude as well. But as I said, I have the Aussie one, now I have the gold one. I don't want to over leverage in the same kind of logic a trade. Anyhow, let's have a look at the pound Aussie and the pound Kiwi, because they are also interesting due to what's happening. The pound Aussie is currently testing this little descending channel, not a really important formation. As you see, it found support at this horizontal area after breaking lower from this just for a single day. For a single day, we traded below these broken triangles resistance. I was expecting it might act as support. We broke below it for one day. Now we're rebounding from there. For me, seeing a daily close above 173.70 is going to be quite important. So still I don't have a confirmation here, but today's candle is definitely very, very strong. Same here with the pound Kiwi. The pound Kiwi broke below this major trend line resistance. Now I was expecting it might act as support. We broke below it. We traded below it for exactly a single day, and now we're back above it. Perhaps in both these cases, these were moves to get people knocked out of their positions. So I'm carefully monitoring, because I like them as reversals. But I want to see more for me to get engaged with them. But I'm pretty sure that sooner rather than later, I'm going to gain some exposure in one or two of these crosses. I mean, either the Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi. I have to tell you that for now, the Euro crosses look better to me than the Pound crosses. So I'm more inclined to be looking for exposure in the Euro Kiwi, especially if the Aussie Kiwi holds. Most probably my preferable position would be trying to see where I'm going to get long the Euro Kiwi. Okay. So what else? Yeah, I added back to my I added another half, to my SPX short yesterday. So now I have a full position with its cost average being at 2,753.5, if I remember right. So it's like 14 handles below here. Obviously, this is also a reversal trade, right? You know, I've had a good year so far these days. If Mrs. Market wants to take something back, I'm fine with it. I know obviously it's hard catching a reversal here, but I see so extremely overbought conditions in everything, and so much complacency that I just want to do it. You know, it's as simple as that. Obviously, if I didn't have, you know, a good start of the year, I might not take the risk, but now I feel okay with that. I'm actually targeting, my target is this high here, 2,695. So that's what I'm targeting. So obviously, even from a reward to risk perspective, I'm not going to let this run over 2,800. Ideally, not even that, to at least maintain.
Today's the high.
We'll see, Dale. You know, as Stelios have said, the problem with stocks is not that they're in a bubble, it's that they're not even a market anymore. Because, you know, a market is a place that you see some kind of binary price action, and that has completely gone away, right? I mean, this does not feel like a market anymore. It feels like something completely different, but not a market.
The problem with these markets, is equity markets in all of them actually, but in equity markets as well, is you have some of the biggest players are central banks now, like the SNB and the Bank of BOJ. You know, they're directly or indirectly buying stocks, which is you know,
I didn't know that we were, but I know the Bank of Japan's been going in doing it.
Yeah, SNB also is one of the biggest hedge funds in the world right now.
Well, they own 20% of Apple, and the BOJ are buying equity ETFs, so it's directly buying.
Who owns 20% of Apple? U.S. government?
SNB.
The SNB, it's amazing, isn't it?
Yeah.
They're they're printing money out of thin air and buying tangible things, you know, with return and the actual assets. It's a good good trade.
As I said actually to Stelios before, you know, we are making fun. You know, we're in a sense mocking the whole concept and craziness and mania with cryptos, because, you know, we cannot be certain that they have any fundamental value, because there is always a big risk that they're going to be very strongly regulated or whatever, and they're going to.
Something's happening with sterling. It's rallying like crazy.
Oh, actually, you're right.
Spanish and Dutch are said to agree to seek soft Brexit deal. That's the headline I'm seeing.
Okay, yeah. By the way, speaking of the cable, keep in mind that the big resistance is the 61.8. I showed this a couple of days ago. If you see this 61.8 also coincides with the low we had at the beginning of 2016 there. That's at 138.30. So I think that level might act as a magnet. You know what I mean?
Yeah. That might be it. Where do you think the Dixie will be when we're up there? We haven't quite made a new low. We haven't quite made a new low in Dixie yet. And I think Greg's highest level was about 90 for a reaction.
Hey, Steve.
Hey, Grega. Grega, first of all, I'm happy you're here, mate. I didn't know you're going to come, so that was a positive surprise. Having to do with the Dixie, and I think then Grega is the person to give us his opinion. First of all, the DXY is currently retesting the closing low that we had in September. That's also the 50% fib of the strong move higher we had that started back in 2014. And the next targets I have here are the following, and Greg can pitch in to that.
Yeah, Greg had it diagnosed perfectly. You're the doctor of the markets. Good diagnosis.
So, the targets I have here are, I have a head and shoulders target at 90.03 to be exact. And then I have almost a confluence of supports One of them is the 127.2 extension of the corrective move higher at 88.68, and the other one is the 61.8 of the large leg higher in the dollar, which is just 20 something, 26 cents lower at 88.42. So if we don't hold at 90, which is the head and shoulders target, I would like to see at around 88.5 a reaction from the dollar. But Grega, tell us what are your targets for the DXY?
For the DXY, yes, exactly the same, basically around 88 to 90. And
okay.
Probably there I would be looking for a reversal maybe in February. I would be quite interesting to see some kind of a potential bottom, but as you know, bottom can take time before it's formed. So for now, I think we just have to stick with these levels, and then we'll see what happens there.
Okay, perfect. So do you also see, because my thesis and what I see here from the charts is a period, I don't know how big it's going to be because I'm monitoring some resistances, that the euro and the cable are overperforming the Aussie and the Kiwi. So I like the rebounds I'm seeing here, but I haven't even gone down to a 4-hour chart. Is this a 5-wave move down in the euro Kiwi, a triangle as a B, and that was a C for an ABC? Do you see complete correction here in the euro Kiwi?
Potentially, yes.
Okay, because that's what I see as well.
Yes, because there were also potential former wave 4 swing low. If you take a look at this November 2017 swing lows, okay, and then you have this old swing high at let me look at from September 2017. So actually,
why didn't I give you the charts? Actually, there you go.
Sure. So actually, I was looking for a 3-wave setback. Okay, and as I said, we stopped at this previous wave 4 swing high and this wave 4 swing low, and since we are now reversing to the upside, I think
that's a strong reversal today as a candle. That's a very strong candle today, undoubtedly.
Yes, and we should really respect what the market has been doing previously. It always continued higher after each pullback, so we definitely don't want to call a top here, rather say and label this as a potential wave 4 pullback. So if I adjust my wave count here, it would be like this: wave 1, 2, 3, 4, and we are looking higher to push into a wave 5. Okay.
Question now, because I'm only looking at Elliott wave at bigger time frames, because I'm also doing other types of analysis, etc. But you're doing Elliott wave, and I know that you're taking it down to the hourly level, the 4-hour level. Is this C wave persuasive for you as a completed C? Because that's the only question remaining there.
Yes, I'm just updating the wave count. It's some old wave count here. Okay, and you can see that clearly we can count 5 waves to the downside here within this leg. Okay, from wave B, from end of wave B. Also, normally when I say that correction is completed, okay, I will be tracking this current strength. So if this current strength, okay, would be going very deeply into this wave B region, which means if we'll get a deep overlap, and at the same time, if this pullback, okay, will be longer than the previous pullback, which was around would be on around 1.6840, then we could clearly say that this is not a correction move, but rather a change in trend, because this was a correction move, and in such case, if we pass this level, it would be more extended. Okay, so obviously, in such case, it would fit more into some other bigger pattern, which would most likely drive us to the upside. And also, if we consider the current price action, okay, if as you know, we talked several times here already in webinars about base channels. Okay.
Yeah, it has already overthrown that to the upside, which is important. Might be a wave 3, right? Of the first wave.
Exactly. Yes, exactly. Okay, so but you still need to see a 5 wave. So if you see today's weekly close, which I believe it will remain around these levels, then definitely you want to stay with this current momentum, and clearly in such case you would anticipate higher prices next week as well. Also, euro dollar is at the highs. I know that on a daily chart it's in a 5th wave, but even that 5th wave has room for 1.24 level. So maybe this makes the case for higher euro New Zealand dollar as well.
Hey, Greg, I have a question. Steve, do you mind if I ask one?
Not at all, Dale.
Okay, Greg, when I first joined the team, your count was for one more shot down in the 10-year, and it's happening in the 10-year, but it's not in the 30. And, you know, bond bearishness, especially with all the news, China's not going to be buying. They reminded the U.S. that they're our banker. I'm wondering if we're getting close to the completion of 5 in the 10-year, and what is there now.
Just a second to pull my charts on.
Thank you. Thanks, Steve.
Actually, what I see is still potential more weakness.
Okay.
Just let me find it.
Because that was a great call. I mean, 4 took forever, didn't it, Greg?
Yes, this was a 4th wave, right?
Yeah.
This is what you are talking about.
Right.
Yes, it was a wave 4. It was very complex, and as you know, I was bearish, especially since we broke this trend line, and it looks like there is more weakness to go.
Okay.
We still actually didn't pass this wave 4 swing low here, and equality level for wave C targets compared to wave A is also a little bit lower. So we need actually what I'm expecting is that we will get two failure breakouts. The first one would be below this black wave 3, and then you should also watch for this red wave A, and then here I would be looking for potential reversal. But I'm not sure really how this will impact dollar in general on the FX markets, because we know that some correlations are not just as they were usually in the past. So I'm not really convinced how this will play out.
Perhaps the disassociations of many of the well-known correlations are also a signal that something is happening here with the markets, that, you know, perhaps we are close to some major events.
Yes, some major changes, you mean?
Yeah, or some major turn or whatever. Yeah.
Yes, because sooner or later they should align, right?
Yeah, and when they align, if they have decoupled for a period of time that's significant, and they've created, let's say, a gap that's quite significant, the realignment might happen in quite a brutal way, right?
Yes, but my question is, what would happen if euro dollar, for example, really turns to the downside? Okay, from that, after that 5 wave movement, how will this impact, or what will develop?
That's where I think you get the bond rally. When the dollar bottoms, it's just a guess.
Oh, okay, so the correlations would remain as it is at the moment.
Yeah. Because higher rates hasn't helped the dollar. So maybe when the bonds bottom, that's when the euro and is peaking and the Dixie is bottoming. Just a guess.
Yes.
But that's what I do. I'm a guesser.
Yes, we are all guessers. we just focus the probabilities versus possibilities. That's all.
Yeah, I'm like
absolutely.
The Riddler. You know, he wears a question mark on his costume, the Riddler.
Yes.
Thank you very much for that, Greg.
No problem. No problem.
Gregor, what else do you see in the markets that you know, gives you a good a high probability trade? I mean, what makes you feel good about your opinion at the moment? Besides, first of all, I need to say to our friends that yesterday we uploaded a blog post.
Maybe you can put a link to chat so that everyone can see or click on it.
I will do that.
Right?
Yeah, I will do that.
So actually, if I just make a quick review, on Monday I talked about this 3 wave setback here on cable. Okay, I said that we see prices in a wave 4.
There it is. I put the link.
this support, and looks like that we are in a very nice aggressive move to the upside. And back then, I think that I mentioned that when prices were in wave C, when it comes to trading, you really should be aware what market can do from your projected levels. It will reverse, or will just your analysis fall apart. In my case, I always try to wait so that market will bounce or maybe react from my levels. And once this happens, then I will try to pull a trigger. So what I did is we just simply wait on a potential bounce. We have seen a nice turn to the upside yesterday with the daily close at the highs. This was probably the best thing what you can do. New swing low, failure breakout, reverse from a trend line, and a bullish close. It means that market was on a bullish side. And then obviously when I see small correction here, earlier this morning I immediately pulled PIP for clients, because we had all pieces of the puzzles that suggested that we are continuing higher, because we had a free wave setback, market reversed from this trend line, so it means it stayed in uptrend, and as you can see, market just simply exploded to the upside into a fifth wave. So overall, I think it's very important for clients that when they are analyzing on yourself, you definitely should not react to the market too soon. You simply should wait how market will respond at your projected levels, and then maybe you act to it. So that's just
Grega, I'm seeing the potential of a top forming here in the precious metals and in crude. I was actually showing that.
Yes, I agree about the crude, definitely. I'm not sure about gold, but crude, I think it's actually very interesting. So first thing that I noticed today is, if you take a look at this chart, I think that it's very simple. I'm tracking a 5-wave movement to the upside, and as you know, extended lag is normally a third wave within this 5-wave movement, and clearly we can count 5 subwaves. Also, what is important that if we take this channel within this extended wave 3, so I connected the end of a wave 2, wave 4, and put the upper trend line at the top of wave 3. Okay, and normally in textbook examples, that's the region where you would see a potential top of wave 5 at the upper trend line. Sometimes you can see a throw over and then a reversal. But not only that, we have also seen move into this 261.8% two fib levels, actually, of the same levels of wave 2, of wave 1, and of wave 1 of even lesser degree. Okay, so
Grega, that's a triple confluence. Sorry to interrupt. That's a triple confluence, because that's also the 161.8 from the 2016 end of year high to the low we found in June. So it's a triple confluence, 261.8 and the 161.8 from there. So it's a triple confluence of resistances.
Oh, yes, and also I see DSI is above 90, as we know, and also what is important to know that we are at this potential resistance back from 2015 swing high. Okay, so it was a former wave 4, and these are very important levels. So when everything comes together, I really think that we could see a reversal lower. And not only that, we have been tracking this this fifth wave, which is this red wave 5 on a lower time frames, very closely and quite accurate, and we have seen 5 subwaves up into 64, 65 levels, and so far we have collapsed through this wave 4 swing low. Okay, so I think that today should be very interesting how we finish this current price movement, but if we see maybe a little bit more weakness or stay where we are, I think that more weakness will follow next week. So at this stage, I'm not saying you should short the market. I'm just saying that there could be a pullback, and definitely much better lower levels to trade on the long side, because I still think there is a healthy uptrend. But
and definitely oppositely to all the news we've been seeing recently, this is not the place to be buying crude. Because, you know, as always, near bottoms and near lows, as we were seeing like some ridiculous titles when crude was trading at 25, like it's going to go down to to 10,
to 10
15,
yes,
yeah, and all that. Now I've started seeing the past several weeks
that
you
it
know,
will go to 80 to 100.
Yeah, that surpassing 70 is a matter of days. That it's going to be returning to a new normal. That 60 is going to be the floor from this point on, etc., etc. You can name it. You've seen this as well. Bloomberg.
Right. Steve, it's about 5 after 6. I do have a guest today.
Sorry. You know, always with Grega we.
I know, and Greg, God, we got to hear you twice this week. It's great.
Which is always a pleasure.
Yeah, thank you so much, man.
Thank you.
And great work. I mean, you also forgot to say that you called the yen sell-off as well, and the Canadian rally when you were here Monday. So
yes, actually, dollar yen was around
right there.
113 right there. Yeah.
Beautiful, man. All right, Greg. Have a great weekend.
You too.
Thank you, Coach. Enjoyed the interview. Thank you, Greg.
All right. Thank you, Steve.
Thank you.
Norm,
bye-bye.
You're on deck, buddy. I'm going to make you the presenter. Here we go. Norm Winsky. We're going to take a look at what's happening in the planets with Norm. Got some planetary aspects from my good friend in Naples, Florida, Norm Winsky.
I'll show my screen. There we go. That's good.
Former SIBO trader, horse picker, all-around Renaissance man. One of the last, of a type of analysis that takes into account lost arts of GAN and Astro, and always interesting to have you here, Norm. Happy New Year, buddy.
Thank you. Can you hear me?
Yeah.
Okay. There we go. Very good. Well, thanks for having me on your show, Dale. Good morning, everyone. Okay, now can you see my notes on the screen?
Got him, buddy.
All right, very good. All right. So anyway, I haven't been on your show for quite a while. I guess it's been, 6-8 weeks, something like that. So I just thought I'd get everybody up to speed. And by looking at past window, change in trend window, last big events, change window, we get a little practice, and you see if there's anything to this stuff, because if I give you a forecast now, you'd have to wait several days to see how it comes out. So my last big window was right at the end of December, going into the New Year's weekend, and my top things for the month were one of my top two. I have two things that are kind of in the same category. My top planetary event, one of them is when the planets go direct or retrograde. That's if you, due to the relative motion of the Earth, you go out and look at the night sky and plot them every night, you'll notice, individually speaking, that the planets appear that they stop their motion and then reverse their direction on occasion. It's like when you're driving in your car and you're doing 60, and you look at your speedometer and it says you're doing 60. Then you look out your side window and all of a sudden you have the impression that you've stopped or you're going backwards. It's because somebody is passing you, perhaps doing 70. That's what happens. All the planets are going around the sun at different speeds. So we have relative apparent motion. If you were to look down at the solar system, they don't do that. It's because of the relative motion of the Earth to the other planets. But Einstein tells you that everything is relative, and that's important. So over the New Year's weekend, December 21 weekend, we had Uranus turn direct. That means it stopped momentarily, and then had been going backwards. That's called retrograde. And then it stopped to go forward, and that's a big deal in particular, for the stock market. Is the big basket, everything, so it responds to all these major planetary events. And also Uranus is connected to copper. So we're going to look at copper here in a moment. Now, this particular grouping of planetary phenomena called station points, and there's another grouping that's under this sort of same category too, not only has the potential to give you a change in trend in the markets, but can invert the polarity of the energy. So I don't know, I know Dale knows about this, but there's a model called the Bradley model where you quantify the different planetary events, plot them on a graph, and you can make a forecast for a market. Most of that has been done on the stock market. Don't know if it's done on any other market. Maybe one of your brilliant people there, Dale, will call me up and get some lessons and figure out how to do that on some of the currencies. But for now, we're doing it this way. So here you go. Here's your copper, and there's the 28th of December. So I was at 1 day off, possibly, and there's a nice top there. And then the copper pulled back more than over the past couple weeks, a little less than 2 weeks, about a little more than 10 cents. So if you're not familiar with copper, every penny in copper, a whole number, or we in the trading community, we like to say a handle, is worth $250. So there's over a $2,500 move.
Right.
That's a lot of pennies, you know. It's a little copper joke there. Pennies, okay. All right, there we go. And back on the stock market, S&P 500. We were coming into the end of December there, and again, Uranus was turning direct, and this is sort of thing is usually big for the stock market. And the usual pattern is that these points tend to act like magnetic poles, where the market will run up. You saw this in the last couple of days because we got something related to that happening now, and that's why I asked to come on your show, Dale. And my phone is ringing, so just ignore that. And so we usually run up, looked like we were rallying into the weekend until we got to that Friday, and then boom, there was a big down. So that's what I call a market aversion move, and that was a clue that things may not be running on the usual pattern and running on the alternate pattern. And I told my clients, watch out, if we take out these highs for the month, that could lead to a big acceleration. And that's what happened when we came back on, I think, Tuesday, Wednesday. We took out these highs, and then boom, went into the rocket mode. You might have noticed that the stock market has been accelerated to the upside. You see the angle before this thing increased its angle of ascent after New Year's. Okay, so that's another point. That's why I call these.
Looks like Bitcoin.
Well, it may be, yeah. And I don't know what you think, Dale. I think the whole Bitcoin crypto thing is a big bubble.
Okay.
You don't?
Oh, I really can't wrap my head around it.
Okay.
I don't want the technical.
I like to joke the Bitcoin bubble is like the tulip bulb bubble without the tulips.
Yeah, I kind of equate crypto to what happened with .com stocks in 2000. And, there were tremendous waves and then a tremendous crash. But out of that came, the stalwarts. So if crypto crashes, that's when I'd be taking a look at it. So here we are on the 12th. You have this as a major potential reversal point in the stock market, Norm?
Right. I got this is a big cluster weekend for lots of big energy for a change in trend. One of the things we have is I do what's called a natal chart. That's where you take a snapshot of the planet's particular moment, like when you were born, Dale, or when a country was founded, like the USA on July the 4th, 1776. And we take a snapshot of the planets, and then we look at the planets now in relation to those planets. And when they get harmonic points, then if we get enough of those, then it's something to be taken, pay attention to.
Okay.
Right. So over this weekend, we have a big point to the U.S. chart, and that implies watch for a change in trend in your U.S. financials, which is U.S. stocks, T-bonds, and U.S. dollar, with an emphasis on the U.S. dollar. I think you'll like that, Dale. So I just looked at the dollar index.
We've been heading down all year, all last year, and we're approaching recent lows on the dollar. So you're looking for a reversal in the dollar where there might be
I'm looking for a trend. I'm looking for a change in trend, which means 70-80% of the time that would be a reversal, like I showed you on the S&P chart. Though occasionally you get acceleration. So we don't hold these levels right where we're at right now. I think I had when I did my letter back in the first, over the New Year's weekend, I had the 91.50 level as a support level on the dollar index, and it was holding until today, until this morning. Looks like it got down to about 91.40 now. So it's just a little one toe over the line.
Yes. Okay.
So anyway, I have a theme here for the U.S. Financials, and with an extra emphasis on the dollar. So, and then we also have, here's my other thing. I told you about station points. In that category, another way we get a planetary polarity point is when the planets, when they're going around the sun, they act like horses on a carousel, and they not only do they go round and round, but they also go up and down. When they get to that midpoint and they're up and down, that's called zero latitude, and that seems to be a very powerful energy point, and that often can invert the energy, from positive to negative or negative to positive. And that's also happening over this weekend. So that's particularly relevant to the stock market, tends to do that sort of thing. If you ever looked at the Bradley model, the people who over the years have tried to follow the Bradley model are frustrated, to say the least, that the Bradley model works for a while and then boom, all of a sudden it looks like it flips upside down. We'll be talking about that more in a few minutes. And I think I've made a major advancement to fix that. So we'll be looking at that in just a few minutes. So anyway, we got this big cluster here, and then on previous shows, Dale, I've been on your show before and showed how the new moon or full moon can often change trend for your currencies. So you want to pay attention to that. We got one coming up on Tuesday night. Monday is a holiday here in the U.S., market holiday, and so you want to watch your financials, your grains, precious metals, and coffee. And the currencies fall under the financials umbrella. Now for the stock market, I have some interesting change in trend points coming up here starting yesterday. Yesterday was the 11th, which was the 45th anniversary of the high in January 11th, 1973.
Were you trading then? I was still in the dorm in college. Were you trading?
I was not in a dorm. I think by 73, I had my own apartment. Okay. And I was invested. I was making money in the ensuing time there. I don't say, I was invested in the market then.
Those were good old days, huh? You had your own apartments. Women were all over you, right?
Not really.
All right, buddy. So also an anniversary of the internet bubble top there too, huh?
I guess for the Dow maybe, but all the other major indices topped in March. Oh yeah, well they're right here.
Yeah.
You're right. Well, it's not an anniversary; it's a mathematical harmonic.
Oh, see, okay.
We have
what's
Gann said Mr. Gann, W.D. Gann, if you're not familiar, he's probably the greatest technician of the 20th century. Said that the markets are musical, so you should go look at the mathematics of music. That's what I do. I happen to grow up playing an instrument, and has a little bit of a musical background. So anyway, this is one of the numbers, musical harmonic numbers, 6,502 days from the March 24th, 2000 internet bubble top for the S&P. That was the day the S&P topped in the 2000. So anyway, I was about to tell you about the 45th anniversary back there in 73. Here's a funny story. So President Nixon, the Dow, I got to back up a moment. The Dow Jones, the 1,000 was the magic. It was the big barrier for the Dow Jones for an entire generation.
Yeah, 20-year range. 1,000 to 600 or something like that. Right.
Well, actually, 570 in early December of 74. But I'm getting to that. So anyway, it first kissed there on February the 9th, 1966. And from that point on, it would get up there, get close, and then run away. And until we got to we had a bit of a bull rally there in 71, 72 into early 73. And the Dow actually managed to get over 1,000 to make headlines. President Nixon was having his birthday on the 9th of January and held a press conference for his birthday. One of the reporters, being the good sheep that they are, noticed the headlines and asked the president, Mr. President, I noticed the Dow Jones is making new highs, broken out over 1,000. What do you think about the economy and the stock market? And President Nixon said, if I weren't president, I'd be buying stocks. All Americans should buy stocks. Okay?
You see any analogies between that and what's happening today?
Well, let me finish the story. Okay. So what happened after President Nixon told all Americans to go buy stocks? 2 days later, the market topped out, and we went into the worst bear market since the 30s. So the lesson here is in math psychology that there are certain people walking around in the world here that are perfect reverse barometers. If you were on the trading floor today, you might have seen some people that were reverse barometers. I remember some folks on my trading floor that were, and you made sure if they came into your trading crowd, make sure you got on the other side of their trades because you were probably going to make money. These people actually had a higher batting average of being wrong than the best traders I've ever known being right. So anyway, there's a little lesson there in math psychology.
Yeah.
Hopefully you were amused by my impression of President Nixon.
It was pretty good.
Thank you. Thank you very much. Oh, that's
and
Elvis.
you are not a crook either.
I am no crook. All right, S&P. We got what I do is I look at some major turning points in the past for the S&P and do the astrological analysis of that, and then look at the planets now and see if we have any big harmonic clusters for that. And we have one of those coming up on Tuesday the 16th. And then I do Fibonacci time cycles. When we get all done here and you learn how to get a hold of me and get my free class, you'll learn advanced Fibonacci and how we can use that for time. And so we have today, the 12th, and also Monday, Tuesday, Wednesday of next week. And then we also have a big astro cluster for right about now over the weekend and into the Tuesday the 16th. Speaking of time, let me give you a major principle here that's going to make all your lives much easier. One of the things that Gann taught was that time is more important than price. My variation on that is that the key times will give you the key prices. So you don't have to play the predict the price game in advance. You wait till you're in the key time window and the market will tell you where it's going to make a high or make a low. You then draw a simple trend line across the tops or the bottoms there, and if you add a little bit, a couple of days later, if you're taking out those levels, you got the old S&P like this here, the acceleration mode, and if not, going back to the copper here, you have the classic reversal pattern, and you put in a high or a low. So it's very simple. You don't have to tear your hair out trying to figure out what price the market is going to turn in a week or a month from now. Just let the market tell you at the key times. You have to have these cycles though to tell you what the right time is. Now I have access. I feel blessed in knowing that I believe I have access to the biggest computer that anybody has. It's called the solar system, which does all these computations for me. So I don't know. I think this is probably better than all the computers and all the PhDs piled up in Wall Street. So I'm going to move ahead now and show you my version of the Bradley model. Now, if you add it up we're talking stock market now. This is December's results. They're starting on the 4th of December, and we're going through the 29th of December. If you add it up doing the standard way that Bradley does it, you would have added up the planetary energy. You would have had a blue line that went pretty much all down at a 45-degree angle all month, and you only would have been right for a short amount of time here. In December, the black bar is the Dow Jones Industrial Average. But what I do is I then take the original forecast and I adjust it based on these polarity points when the planets can reverse the polarity. So you can see here's Mercury turning retrograde right there over that week in December 1 weekend, by the way. That was a nice top, short-term top there. Then we went down to when Mercury got to 0 north latitude and we made a low. And then I invert the line, the blue line going up. The blue line is the forecast line. And then we went up all the way till when Venus got to 0 latitude, and then we made a top, had a shallow little pullback there, and the Mercury going direct, and then we went up till right around when Uranus turned direct at the end of the month. So that's a major, in my opinion. This is a method is a major advancement for that forecasting model. Whichever side. I know some major financial astrologers, big name financial astrologers, who've actually given up on the Bradley model because they don't know about this.
Arch Crawford.
All right, now we're going to. What's that again?
Has Arch Crawford given up on it? He made it.
I don't know. I'm not going to name any names. Okay.
All right, Larry Pesavento.
Nope.
All right.
Anyway, not going to name any names. Like they used to say on the old.
Dale Pinkert is giving up on the Bradley.
Dale, like they used to say on the old Dragnet TV show, the names have been changed to protect the innocent. Right? Dum-ba-bum, bum-ba-bum-ba-bum. Remember that?
Yeah.
There's your Dragnet music.
Welcome, Norm.
What's that? All right, so we're going to fractal land. I don't know if any of your folks know about fractals or not. Any of your people been on your show talking about fractals?
Yes.
Okay, well, fractals are simple. For those who don't know, here's the simple concept. If you've ever seen a pine tree, that's a fractal item. And the branches of the pine tree look like miniature pine trees. And that's Elliott wave is a fractal system. You have waves within waves. You just had an Elliott wave guy on, I think. You have waves within waves and so forth. So the whole concept of a fractal is that you can take a piece of something and extrapolate out what the bigger thing is going to be. Okay, we used to have one of my all-time favorite game shows on TV was a show called Name That Tune. And Name That Tune, they would give you a few notes. If you recognize the pattern, you may know the whole song, all right? That's what everybody knows.
Metaphors.
Thank you. That's what that's what everybody in this business is trying to do, whether they realize it or not. You get a few clues, and if you recognize the pattern of those clues, then you might be able to extrapolate out the coming pattern, you see. So anyway, so I got onto that in the early 80s. I stumbled on the old Wall Street adage, as January goes, so goes the year. So I started doing that for the stock market. And then many years later, I got the idea, gee, I wonder if this worked for any other market. And guess what? It does. We live in a fractal universe is my conclusion. So here you go. Just for example, we got to sprinkle in here a little commodity biz, right? In that all currencies. So, you know, this morning, you folks might want a little coffee. And so now I fractalize the coffee market. These are the results from last year, 2017. And I take the price action in January, extrapolate it out for the year. So there you go. The blue bars were the forecast. And then after the fact, at the end of the year, I overlay the actual prices. And you can see that worked pretty well. Now, here's another thing that happens here. You're going to say, oh, it did work there. The train went off the tracks right about the 26th, late September. And I'm going to show you, well, it's not a total wipeout because watch. When I take, can you see my hand there on the chart?
I can.
Great. So if we go straight up from that little low there and go straight up, we're pretty close to that top right there. So the lesson here is that sometimes the direction will invert on you, but then the timing is often still good. Okay. So there's your coffee. Here's copper. Copper, I showed copper because copper's been one of my perennial winners. It's been worked very well for the last several years in a row. I have another one like that, which you will get very excited about in a minute. Okay, so anyway, this is, by the way, doing this is so simple. I believe that I could teach a 10-year-old to do this in 10 minutes. And it's probably better than any Wall Street forecasting model with their billions of dollars of computers and PhDs. You don't have to be smart to do this, you know. Don't have to be smarter than a fifth grader, that's for sure.
I've seen Norm hit a lot of turning points. So, okay, here we got fractal on.
Here you got fractal zero taking the January price action. You can see that's worked out pretty well.
Yep.
Mm-hmm. Got near the high of the year here. Had a nice little, as we went along, it got better and better. So by the end of the year here, you're right there, and then to pull back there and up there, it's like some of the older folks might remember Fred and Ginger dancing, and there you go, the Fred and Ginger dancing together, you know.
No one in here remembers that.
Nobody in there, all right. All right, well, just for reference, Fred
you could go to Turner Classic Movies and check it out.
Yeah, Fred Astaire and Ginger Rogers were major movie stars that famous for dancing musical movies where they would dance together.
People barely know who Elvis Presley was anymore. All right, buddy.
Oh my God. Yep.
Now we have the yen.
Yes, sir. The yen has also been a perennial winner in these models here. Works very well every year, the last several years. And there you go. It's pretty good, right?
Yes.
I think if we go with that right there, it lines up pretty well with that top there. Okay. Look at that, how it goes up and then goes down. All right. All right, now we're going to move ahead, and just in case any folks out there are interested in day trading, I think one of the best day trading vehicles are the S&P 500 S&P E-mini futures. And I'm going to show you here a very simple demo here of what you might be able to do with this stuff. I want you to learn, take my free class, and it takes me about 20 minutes to teach the folks how to get tuned into this stuff and start doing it.
When's your next free class scheduled?
Probably in February. Now we're getting kind of late in January, you know.
Okay.
But the deal is, you know, I only have about a handful of people that I can help every month. So call me right away. So you know, you're not in the back of the line, or I don't have to. I don't want to bump you to the next month, you know. All right, so here we go. Here we have something that, you know, this is not a big cycle. This is just a little cycle. The moon zips around the Earth. It's the fastest body I track, and they make lots of key angular relationships almost every day, all day long. So anyway, we had here, this is a very simple day. When from a point of view of the Earth, we only had one important, important what we call aspect, angular relationship between a moon and a planet. That occurred at 2:40 p.m. Eastern Time on January 10th. And look what happened. The market had a pullback right to 240. You can see the data box there. That was the low to the minute. And then we rallied 6 handles into the close. If you're not familiar with S&P 500, E-minis, each whole number is worth $50. And so 6 handles is $300. And then incidentally, this rally continued big time. Over the last day or so. This morning we got up to, let's see, 44. We're 30 handles higher now, you know. So that's 30 handles would be $1,500. That's like real money, you know. All right. Anyway, so there we go. So we got some interesting stuff here and different methods. And here's my numbers for 2017 because it's we're now in January. I can show you these. And I got all these markets I track, and most of them were very good. I only have 2 that were less than 50%. Most of them are much better than that. And then the overall average was 70.88% for my signals presenting, offering you a opportunity to make some money. Okay.
Oh, 100% in Aussie. Nice.
There you go. Yep. Only had 2 signals there. But yep, 100%, 2 out of 0. Mm-hmm. British pound was 5 out of 6. That's pretty good too.
Yeah.
And you can maybe
your overall hit rates, that's excellent.
Yep. Well, thank you. All right, so you might want to find out more about this and get your free letter and your free class. And I'm here, as Dale quickly alluded earlier. I've been doing this a long, long time. I started looking at studying the stock market when I was 15 years old. I'm 66 now. And I was investing in college and making money in the great bear market of 73, 74. As a result of that, I made enough money to, I ended up, after making my first big hit, actually because of my background in the family, it was in the scrap business. I ended up, knew quite a bit about the copper mining and so forth. And my first trade was buying a copper mining company, and I made money on that when everybody else was losing in the big bear market of 73, 74. Took that money and started doing some things in the new option market when the CBOE opened their doors. And that led to my further investigating as a college student, and ended up buying us a membership there in the new fledgling exchange in early 75. I was on the floor there for 12 years. I also traded on the Chicago Board of Trade. CBOE was a child of the Board of Trade. So anyway, so I got a little bit of experience, and then I got to Chicago and started studying astrology in college. Went to school in Indiana where I grew up. And then I got to Chicago, and then it was even better because they had lots more books and lots of people to network with. And I learned Gann and all cycles and Fibonacci and all the different stuff, you know. So you can get a hold of me. I'm in sunny Florida. Most of the time it's sunny here. And beautiful Naples. And there's my phone number, 239-594-3939. There's my email, Nwinski, Nwinski, at embark, EMBARQMAIL.com. And there's my Skype handle. You can call me on Skype at norm.winski, NORM.WINSKI. You get if you qualify for the free letter and free class. It's an individualized class, 1-to-1 on Skype, and usually do about 5 or 6 hours, and kind of take you to Traders College. You get a whole Traders College education in about 5 or 6 hours. You're going to learn some Astro, some advanced Fibonacci, some Gann, how do you put the Fibonacci and the Gann all together, and also fractals, and also how to day trade this stuff too.
So Norm, I want to thank you for being here. I encourage people to contact Norm. This is rapidly becoming a lost art. And if you want to learn about this, you couldn't find a better guy to learn about this methodology, multiple methodologies that are quite esoteric, but Norm is a natural teacher. So, you know, I hope you have a great 2018. I know I'm going to see you in a month or so again, Norm. Thanks again for dropping in, and congratulations on your hit rate for 2017.
Well, thank you very much. And by the way, the stock market had a big, followed up with yesterday, big rally yesterday. And overnight here, we went and hit to, you know, you're being getting my updates, Dale. So, you know,
yeah,
I was looking for about 2774, 77 area on the S&P, and on the futures, we basically got to that window overnight. and then it gave back some of it this morning. So hopefully we can get the S&P cash to get back there too, you know, and then we'll be getting set up for maybe a nice trading top here, you know.
Okay, buddy. Good hunting.
All right, thanks a lot. Happy New Year. Looking forward to helping some of your folks, you know.
Okay, there's Norm's number. Take a screenshot. There's his email. There's his Skype. And thank you, everyone in Face, for another great week. We'll be closed Monday for the holiday. See everyone Tuesday. Remember, don't just count your pips, count your blessings. Have a great weekend, everyone. Don't forget, sign up for the letter. It will be, the offer will be gone on Monday. Adios. See you, Norm. Thank you.
Thank you. Well, can I talk to you in a minute on Skype? I'll get back to you on Skype, okay?
Okay, sure.
Thank you.